Good morning, good morning, good morning. On a Wednesday, it's the mid of the week, mid of the first week of June, the 5th of June over here. We're going to go through what we did yesterday, a quick review on yesterday's. We were looking for buys above the 2353 area, which never happened. But on the sales, on the other sell side, we were looking for potential sales below 2342. We had a very nice run over here to take profit 1. We went to take profit 2, take profit 3, and then we went also to take profit 4 and even surpassed it. Went even down, right? So our target was up to this point to take profit 4 over here, but we surpassed it and we went even down, completely down. The market went and retested on the weekly. Market went to the weekly support, bounced over there and started coming back up again. All right. So also, just to mention, yesterday also we had the JOLTS job openings, and I remember someone who asked a question and said, and it was asking a question and said, why did gold continue pushing down and yet the news or the JOLTS job opening came out negative for the dollar? So basically, what it's supposed to happen is if the news were negative for the dollar, the gold was supposed to buy, right? So gold was supposed to buy because the news were negative for the dollar, and it did do that. But over here, this is what happened during the jolts. Gold pushed up to this point and then got rejected and then went down. So the question was, why did it go down and yet the news were negative for the dollar? Yes, the news were negative for the dollar, so that means the dollar went down and gold should have gone out, and it went up to this point. As you can see, the numbers were not that much in a very higher range. The difference was not that much. But the reason why gold pushed down is it has nothing to do with the jolts. It's just that at the same time when jolts was coming out, there was before the jolts, of course, there was some speculation. What was driving gold down like this yesterday is because there was some speculation in the morning that came out in the market, and there was rumors that the rate cuts were not going to be added, right? So there was rumors that the Federal Reserve Bank would increase rates for the dollar, and that strengthened the dollar during the day, weakening the gold. But then at that time, when the New York NYSE opened, the same time that JOLTS was coming out, then the Fed confirmed that they are going to cut rates instead of adding. So when they cut rates, it's bad for the dollar. All right, it's bad for the dollar, and if it's bad for the dollar, then it's good. Then it's good for the gold. All right. So the reason is, before that time, the market was driving on the speculation that the dollar rate will be pushed up. The market was driving on a speculation that the dollar rates were going to be added. That's why the market went down like that. But after the 5 p.m., of course, this was just rumors that was going down. This was rumors that pushing the market down until 5 p.m. when the new NYSE was opened. That's when the real effect hit the markets. And then after the effect hit the market, then the Fed they confirmed that they're going to actually add. They're going out to actually cut the rates. They're actually going to cut the rates, not to add. So it became bad for the dollar, and of course good for the gold, and that's why now the gold started going up like this up to this point. All right, where it is right now. Hopefully that's much understandable. So it has nothing to do with the jolts. It's more of rate cuts, the interest rates. Go just check out about interest rates. You'll understand why this happened. All right. Great. Let's check on today. Today's on Wednesday. What do we have? On Wednesday? We had the GDP on the AUD, which already passed. We have the ADP. Nice. This is the major news for today. ADP. Oh, great. No, we have the ADP, and at 4:45 we have the ISM, the ISM PMIs. We have the PMIs, the ISM PMI, the service now. The one that was on Monday was the manufacturing. This is the service PMI. It's happening today. So definitely the market is going to face some fundamental push at that time. 3:15 and 4:45. Great. All right, let's jump onto our analysis. we see the candle that we thought that we were talking about, the candle that we were saying that is the candle we thought that is going to fill the wick is now pushing a bit of lower than higher. Let's see what we will have for this wonderful day. Now, self, okay. So we have monthly resistance and monthly support. Monthly resistance, monthly support. We have over here, we have weekly support, and that's where the market came, bounced around that area. Let's see on the daily, what do we have on the daily? So we'll adjust this. All right, so where the market bounced at the with the daily support, not the weekly support, the daily support, sorry. Yes, it's the daily support that where the market bounced. Over here. Okay. The daily support over here. Yeah, the H4, sorry, no. We did not consider the resistance. The resistance is over here for the daily resistance. The daily resistance. All right, so this is what we're having right about now. Weekly support, daily support. We have the daily resistance over here. Anytime when we break above this daily resistance, it's gonna be a very nice push to push all the way up over here. It's gonna be a very nice push. H4. See what we have on H4. We in here, we have a high over here. H4 resistance or high. H4 resistance. We have the H4 resistance over there. We have the H4 daily and H4 support falling on the same place. They're falling on the same area. 1 hour, what do we have on 1 hour? Wow. If we had done this analysis, this would have been a very nice rejection and push down. This would have been a very nice selling. Anyway, yeah, it is what it is. We are out. We have not yet gotten it, so there's no need to actually even talk about it. Right, so we have the 1 hour support over here. One hour support forming over there. The same place with the H1 resistance is the same with H4 resistance as well. What do we have in 30 minutes? The last time frame that we're going to go. Yeah, it's basically over here. Okay. So this is the H1 support over here. H1 support. H1 support is over here. Then we have the 30-minute support over here. Like that. like that, like that, like that. All right. So now, well, I don't really like this. Is a very small area. It's only like from 23.26 to 23.24. It's a very small area for us to actually sell. So let's do, you know what? I'm gonna do potential sales below this area. If you want to do aggressive sales, you can do below that point. But for me, I think I want to do potential safe sales below 23, below the 23, 22, 23, 22, below 23, 22. Potential sales below 23, 22. I'm doing it below this week over here, yeah? It's below that week over there. Potential sales. And of course, we're coming down here to this take profit. I'm gonna have to just minimize this a bit. I want us to look at where the next the market could go. That's why I'm expanding this. Yes, over there. That's the next point where the market. No, we have this point as well where the wick formed over here. Yes, great. All right. So I'm doing that just so that I can be able to see where could the market go next? Should we have some bearish pressure filling up the market? Is we expect such moves? Right. So TP2, TP3. Okay. Stop loss just above that point. In terms of buys, right now, see the market is right here right now. Okay, so the thing is you can do aggressive sales over here, aggressive sales, potential aggressive sales. You can do potential aggressive sales over here. There we go. Yep. So I could say, yes, you could start your sales from above here, but this is the safest sales. At least this one, we have good range to be filled on the left. But wow, what is this that I've written? Speaking Spanish now. Okay. There we go. Great. So for the buys, I really like this area, but I need to see how the market will behave over here. I really need to see how the market will behave when it gets over here. So this area, I'm gonna just leave it for now. I'm gonna say for now, it's a no trade range over here. This one, I'll call it a no trade range for now until we get a new formation of a low over support. All right. But buys, I might take them above that, above the wick over here. Potential buys above this point. Potential buys above 23.42. About around the 23.42 area over here. Yeah. And we're gonna go to TP1 over right over there. And then should we have more pressures, we go there and then we can fill up there. All right, so let's write this TP1, TP2, TP3. Long position, push them over there, push it like that. The thing is, don't be surprised if the market also breaks way up with too much pressure and goes all the way up and up and up and up. Because if you look on the left side, should we break above this point, we could go until this point, see, like that. So we still have areas as to what we can do. So we're looking for buys above this area, but this is, of course, this will be dependent on what the market will be doing down here. See the way this candle has pushed down like this, should it now start consolidating along this area, then we will have to do another resistance over here for whatever we form, and then we'll be able to trade this range. But for now, since this candle has not yet closed, we are going to say it's a not trade range until it closes. Okay. So this is an analysis that you need to do. You need to review it a bit later in the day. It's an analysis that we will need to review a bit later in the day just to see how the market plays over here, because this is a very big range for not trade range. Yeah, it's a very big range. And since we are going to be looking at it for the whole of the day, then most probably we're going to be having the buy. Most probably the ADP in the evening, the ADP most probably may give us a good number, and we may end up pushing up to fill up this. All right. So let's keep an eye on this, and let's see what we have, what we were getting out of this market today. Have a good day. Just risk manage your trades and trade what you see. Like we always say, trade what you see and not what you think or what you wish. Okay. Have a good one, guys.